What's been happening in the Brisbane market? Well, it's market update time.
We are excited to be presenting to you the very latest data for the month of March 2025. We're going to be sharing some insights in terms of what our team have been seeing on the ground as well. So we hope you enjoy this market update episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi, everyone, and welcome back to a Brisbane Property Podcast with Scott and Melinda Jennison. It's market update time.
You sound so excited to be reporting on the data today, Scott. That's not normally like you to get so excited about data, but welcome back, everybody. Really excited to be here because I'm normally the one that gets excited about our market update days, as I've spent a lot of time, obviously, ploughing through the data to help you understand what's actually going on here in Brisbane. And we try to overlay with some relevant stories of what we've been seeing on the ground as well. And March was an interesting month, Scott. We had a cyclone or an ex-cyclone cross the border, and we had the Olympics announcement all in the same month. So really interesting times here in Brisbane.
Yeah, it's a very exciting start to the year, really, when you look back at March. The year is getting away on us. We're in April already, so the year is getting away. But as you said, we had the details come out for the Brisbane infrastructure, for the Olympic Games, for 20 Olympic Games and Paralympic Games for 2032. Obviously, that will change Brisbane a lot when we look at that, and we'll talk about more in that in other episodes. And obviously then the cyclone or ex-tropical cyclone Alfred, I think it was. I've even forgotten his name now.
Yeah, he came and went really quickly, didn't he?
So, yeah, that it. Look, all those things I think had a little bit of an effect on the market.
Yeah.
Long-term wise, I think the Olympic side of it will have more of an effect. Obviously, that the cyclone came and went. Low-lying areas flooded, as we've talked about in the past, but other than that, pretty good for Brisbane. And obviously, we've got a federal election coming up around the corner as well.
Yeah, it's been interesting here in Brisbane. The data also shows that the Brisbane market is continuing just to tick away in terms of its upward trajectory in terms of price growth. So we have seen houses and units continue to escalate upwards. Now, I'm not talking huge changes in prices, but it is ticking away, and the values are still increasing, just at a slower rate than they have been previously, especially in the housing sector. Although I will say that it did pick up again between February and March in terms of that rate of growth, which we will get into a little later in this podcast. But I will say the buyer interest appears to be picking up a little bit as well. And if we relate that to what we're seeing on the ground, we turned up to an open home in a townhouse inner city, Woolston, actually. There were more than 60 groups through. Anyone that follows my LinkedIn profile, and if you don't already, I encourage you to look me up on LinkedIn and connect, because I do provide regular market commentary through my personal profile, and you will see some of the photos that I take when I turn up to open homes with the volume of buyers that turn up. Alternatively, please connect with our team on Instagram. Our handle is Streamline Property Buyers. There you will also see real-time updates. Every Saturday we show you where we are, how many people are turning up, whether properties are selling under auction conditions or not, how many people are registered, and it's going to give you real-time market insights that you won't get anywhere else. So feel free to follow us and get those market updates, because they're not available anywhere else. And that's going to put you also at the face of the market in real time like we are.
So as you said at the start of the episode, I was excited about the data, and I'll just throw a quick one in here. So according to CoreLogic, Brisbane dwelling values rose by 0.4% in March, a modest reacceleration from February of 0.2% increase. And over the quarter, values rose 0.9%. So matching February's quarterly figure and bringing the annual growth to 8.6%. So Brisbane's actually outperformed many of the capital counterparts, including Sydney, at 0.3% monthly, 0.4% quarterly, and 0.9% annually. And Melbourne at 0.5% monthly, 0.3% quarterly, and negative 0.2% annually.
Negative 2.6% annually. It's been interesting. Melbourne actually has seen a small uptick in the last couple of months. And in fact, it's ahead of Brisbane by 0.1% in terms of dwelling price growth again in March compared to February. It was ahead of Brisbane again. It's interesting to see what's happening in Melbourne. Some of the lackluster growth in previous years appears there's an interest back into that market that appears to be, causing that price movement. There's still headwinds that people need to be aware of due to a lot of political change. And in fact, one of our clients reached out to us just this week with a notice that he'd received from the Victorian property. He owns assets across many states around Australia, but one of those assets is in Melbourne, and he reached out to us to show the notice that the government had sent through about short-term accommodation stays and the new taxes that will apply to landlords in Victoria that have properties that are on the short-term rental list. So really interesting how that political intervention can impact on demand, and it'll be interesting to see how that plays out into the future. But we're not talking about Melbourne, we are talking about Brisbane. We are seeing the median days on market here in Brisbane drop again. So last month, the median days on market was sitting at 24 days. Throughout March, that dropped to 22 days. So the market's moving a little bit quicker than it was just a month ago, but compared to this time last year, it's actually a little bit slower. So 17 days on market is what we were experiencing this time last year. So the market slowed down a little bit compared to 12 months ago, but it's sped up a little bit compared to last month. So I hope that makes sense.
And obviously then if we look at the supply side of it from construction, so HIA housing forecasts, again, it's putting us into a challenging position because we're having more homes completed than we're actually having commenced. So that's going to put more and more pressure on. There's a mismatch obviously between the completions and what's actually starting. So there'll be more pressure on that supply side of it.
Well, where that becomes relevant is the fact that we've had a population rate of movement into southeast Queensland and specifically into Brisbane, and everybody that moves here requires housing. So, the fact that we're completing more than we're starting means that we already have a vacancy crisis. We already have low supply in terms of the number of properties available for sale. If our rate of population growth continues, and yet we're now building less than we have been previously, once those properties are completed, we're going to be in a worse state than what we are now. So that's where that becomes an issue. And the Housing Industry Australia reports have also given us some insights into what is compounding the issue as to why new commencements are not actually coming out of the ground. So a greenfield house here in Brisbane, that means a new house and land package in the outer suburbs, in the outer areas, it's now averaging around $830,000, and that's up from approximately $500,000 just 5 years ago. That's a huge difference in price escalation to bring a new property to the market. So a change of $330,000 over a period of 5 years to build a new product and build that to the market. Obviously, developers then need to apply a margin to be able to sell that with a profit in order to deliver that to the market. There's a huge gap in terms of the price of brand new product and the price to buy an established product as well. And that's why we're sort of going to continue to see some concerns in relation to that new construction space.
And this is all over the board too. So I know I've mentioned before on the podcast, people that are visual and like to see a lot of the information that Melinda actually does do. I don't do that. I'll put my hand up there. But there's blogs on our website. So if you go to streamlineproperty.com.au, you can have a look through the blogs, and a lot of this information is in here, and it's actually quite amazing when you look at the graphs that are in here to see the difference in price for the cost to actually build these houses.
And it's the same across all capital city markets throughout Australia. It's not unique to Brisbane. I think what's unique to Brisbane, and I think this is important to highlight, is the net interstate migration that's coming into Queensland. And in fact, Queensland has seen a significantly higher movement of people from other states more recently. And this is why, we have this unique environment. And if we look at listing volumes as well, here in Brisbane, the number of properties available for sale, that's the total listing volumes, it's still lower, well lower, about 30% lower, in fact, than our long-term average. And what that means is we are in a situation where more and more people are relocating. Those people need homes. Vacancy rates are low. There's nothing to rent. Listing volumes are low. There's very little to buy. is it any wonder we're seeing that upward pressure on both rents and on prices, because there's high demand at a time where there's low supply in both the rental market and the home buying or sales market, and that's why we're seeing that escalation on prices. And if people have the capacity to continue to pay more from an affordability perspective, prices will continue to go up.
Yeah, I'd love to be able to show people the graph here that we look at when we look at the net interstate migration. And as I said, go and have a look at the blog. It just shows you that the amount of people that are coming here and why we've got pressure on properties and then pressure on prices for properties as well.
I'll also just say that, we've got ourselves into a situation that the cost to build new housing consists or incorporates a significant sum of money that goes towards government taxes. Now, as an example, to build, so government taxes might include infrastructure charges for local councils. It might include regulatory costs, GST on all of the goods associated with building that product. There's a lot of different taxes. We've got stamp duties at a state government level, etc. Now, for greenfield houses in Brisbane, the taxes have increased 106% over a 5-year period between 2019 and the beginning of 2015. Infill apartments, taxes on that product here in Brisbane have increased 68% over the same period of time. Now, think about that. This is just the component of the purchase price that consists of the taxes that the government takes on these new builds. Is it any wonder that we have an affordability crisis when the government is taking more and more or adding more and more to the cost to deliver these products? And of course, who has to pay for that? It's the consumer that ends up buying. Now, the other thing is, especially in the attached dwelling market, that's those unit spaces, especially high density, the cost to build these new products has significantly escalated for all of the reasons we've outlined already. And yet the established price is still at a point where there's such price disparity between brand new and established. Unless we see that shift in that established price, developers just aren't going to build that product and bring it to the market, because the buyer's not going to be prepared to pay that. So there's definitely got to be a shift in that market somewhere to bring it back to equilibrium, because at the moment it's too expensive to build, and for what they have to pay to build it, the consumer's simply not going to pay to buy it, and that's a big concern.
Yeah. So if you look at Brisbane dwelling values, throw some numbers around here. So median dwelling values, and this is dwellings over Greater Brisbane, has climbed to $899,824. So as I mentioned earlier, that's an increase of 0.4%, matching the national average.
Yeah, so quarterly growth sitting at 0.9% for Brisbane and annual growth sitting at 8.6%. So Brisbane is still one of the top 3 capital city markets in terms of that annual dwelling price growth compared to all other capital cities around the country. PropTrack data for March also shows positive price growth for all dwellings at 0.07% over the month. Looking at the market segments, and this is quite interesting because I was just actually educating our own team in-house about why we're seeing this trend in Brisbane. The bottom 25% of properties that are transacting here in Brisbane in terms of dwellings as a whole are still growing at a much faster rate than the top 25% of property value. So this is very much an affordability restriction. However, I will say it's also due to the fact that the majority of our apartments fall within that lower 25% of property values. So if we're to look at the median value for an apartment, it's under $700,000. It's $694,000. And the median value for a house is actually $981,000. And we look at that segmentation, a price point in the median value for a unit actually would sit in the bottom 25% of property values, and yet a price point for a median value for a house would sit in either the 50th percentile or in fact above the 75th percentile, meaning that a lot of the houses that transact, especially in the Brisbane City Council region, will be sitting in the top 25% of property values. So units have been for many months outperforming houses in terms of monthly price growth, and that is definitely having an impact on that segmentation of dwelling values across all of the market. And super interesting because this is a trend we've now been seeing for several months.
I think the unit market has outperformed, 3 years probably continue. It's just on and on and on. The unit market has outperformed the housing market.
In Brisbane
it's in
specifically.
Brisbane, yeah, and it's been really, really strong. If we jump into the house values, so median house values in Brisbane for March, $981,474. That's up 0.3% from February.
And just so that you know, in February we actually had 0% change in house values. So January we saw house price growth that dropped to nothing in February, and now we're starting to see that house price growth again. So definitely a market that's still on its way up, although it's crawling now. It's certainly not running.
Yeah, and PropTrack also recorded on that an increase of 0.04%.
And look, growth on an annual basis in the housing sector here in Brisbane is sitting at 7.5%. When we compare that to the performance of the unit market, Scott has also pointed that out, 14.1% price growth in the unit market. So, it's almost double the performance. And that's not only the case in terms of house price growth, but also in rents as well. The unit market has performed better in terms of rental price growth compared to the house market. Just staying with the house market for 1 minute longer, also looking at gross yields, they have remained steady month to month. They're sitting at 3.5% gross. So, it's an interesting question that we get asked a lot around cash flow, like can we still buy a positive cash flow property in Brisbane? Look, the answer is absolutely if you're prepared to put a lot of cash down up front and not leverage. But if you're borrowing, 100% of the property value using an equity loan, absolutely not, because your gross yields for a house are sitting at 3.5% and interest rates are sitting and hovering somewhere around 6%. Cash flow, alone, even without allowing for your holding costs, which are over and above interest, such as rates, insurance, water, maintenance, etc. Like, I don't know how you're expecting a positive cash flow when interest rates are a lot higher, unless you are putting in 50% of the value up front. So the cash flow position of a property is very dependent a lot of the time on how you're leveraging, how much cash you're putting in up front, and what the interest is that you're paying on the asset. It also is dependent to some extent on the way you're actually structuring the loan. So interesting when we do continue to get those questions in a higher interest rate environment. I'm not sure where people are buying positive cash flow properties in the residential space, especially in capital city markets, for people that are leveraging at 100% plus cost, because its yields would have to be in excess of 7.5% to make that even feasible.
So the unit sector, obviously still out, as we mentioned earlier, still outshining housing. So medium unit values reaching 694,577. As we mentioned earlier, up 0.7% month on month, 2.1% increase in the quarter, and annual growth of 14.1%. And PropTrack also confirmed a 0.25 monthly increase.
And look, gross yields in the unit sector of the market sitting at 4.5%, so much higher than gross yields in the housing sector. Look, sometimes people say, yeah, but what about body corporate costs? Look, body corporate costs can actually really chip away at that net yield, but that's not always the case. Sometimes you can actually have very low body corporate fees. And in fact, because the other expenses associated with holding an asset that might be strata titled, things like your rates are lower, your insurance is lower, your maintenance is typically lower. And these are the sorts of things can also affect your net yield. So those that assume just because there's body corporate fees that the net yield is going to be eaten up and the gross yield is a little bit hyperinflated for that reason, that can be grossly inaccurate. So it is important for investors to understand that. If what I'm talking about doesn't make sense and you're considering buying a unit or townhouse, reach out and get professional guidance, because there's a lot of complexity associated with body corporate schemes that you need to be aware of before you buy, and you don't want to get caught out and expose yourself to risk.
Rental market, there's no news flash happening here.
No.
Vacancy rates obviously rose slightly, 1%, so very, very tight in February, up from 0.8% in January, and yet really, really tight. So as Melinda mentioned earlier, gross yields, fairly stable, 3.5% for houses and 4.5% for units.
So house rents have increased more in line with inflation over the last 12 months now. it's at 2.9% growth over the last 12 months. And that's slightly up from February, where it sat at 2.8% growth. Now, when we were having these conversations 12 to 18 months ago, we were talking double figure rental price growth. So that has really slowed down. A lot of that is due to affordability constraints. In contrast, in the unit sector, we are still seeing slightly higher rental price growths on an annual basis. 3.9% rental price growth annually throughout March, or looking at the 12 months to the end of March. That was up to 3.3% in February, so slightly higher growth again in March, looking at the 12-month basis, or that annual growth. So it does signal that there's definitely continued upward pressure on rents. We have seen a slight escalation in both segments of the market, but the unit market, being more affordable even in terms of rents, is seeing stronger price growth in terms of rents, and potentially that's due to that demand pushing those prices up.
So I think when we look at a summary on it, when you look at entering the next quarter of 2025, obviously with the infrastructure announcements, there's a lot of wave of certainty there, optimism. I think people are really positive and jumping on the back of that. Inner city areas, middle rings, obviously for investors looking for long-term investing. I think there's really good opportunity there for people long-term wise. Just on that, inspection you went to, I think the 60 groups, I think it was on that weekend,
offers.
17 offers went on
Crazy.
it. So you can see that demand is still there in good locations.
Yeah.
Okay? When we get in towards that inner city area and that middle ring, really strong demand in those areas as well.
I will say, though, we have also turned up at auctions where there's been no registered bidders. So, not all property types and not all sectors of the market and not all locations have that same level of demand. It's so important to understand that. Brisbane is simply not a single property market. Brisbane has so many micro markets within its larger market, and that's where being on the ground will really help buyers understand what is happening at a local level. And that's why I do encourage you to follow us on Instagram. The handle is Streamline Property Buyers. You can follow our stories on a Saturday. You will see what we are seeing in terms of the demand that exists in the market in different pockets, because we are sort of sharing locations that we're visiting throughout the city. When we see properties that don't have a high volume of registered bidders, we're sharing that information. When we see properties that have a huge volume of registered bidders that are selling under the hammer, we will also share that information, and that helps you to get an understanding right now what is actually happening across the market.
Federal election?
Yes. I think that creates a level of uncertainty for a lot of buyers. So people don't like change. And the fact is that people don't like the prospect of uncertainty. Now, it doesn't mean to say that they're not going to make a big purchasing decision, but it sometimes means they will delay making that decision until after we have more certainty in the market. We certainly have seen that in the last two elections, just that little bit of hesitation from both buyers and sellers in the lead up to the election, but usually the activity returns to normal levels very soon after. I will also say that, just in the last few weeks, Brisbane residents have been receiving their updated land values. So the Office of State Revenue has been sending out new land valuations. We've been super pleased to see a lot of our clients' land value position has escalated. Whilst that's not great news from a land tax perspective for those that already pass those thresholds, it also means slightly higher council rates. What it also means is that those investors have seen an uplift in the value of the land. When we look at assets, we're looking at the land component as well as the building component. Buildings depreciate. They lose value over time as they get older. The land appreciates. And when we see uplifts for our clients that now show the land value itself at a price that's higher than what they actually paid in less than 3 to 5 years, that's a significant return on investment. And in fact, one of our past clients was so excited. Just this week, he phoned me and he said, Melinda, I now understand the strategy that you've been implementing across my portfolio for the last 3 to 4 years. I've now got my land valuations and I can see that equity uplift. I can see the land value increase. Let's talk about the next investment because I want to be able to leverage this. This is what real wealth building and, equity growth consists of. It's about identifying those locations that will get the best possible uplift in land value over time, because that's where you build true wealth and you can leverage off that equity.
I'm sure that long-term wise, he's going to make a lot more money than someone that's looking for cash flow. I'm just going to throw that one in there. Interest rates, look, we're unsure, expected probably later this year we might get another cut.
I expect next month, actually. I think by May, there's a lot of talk already in the market around interest rates being cut. Will it be 0.25% or 0.5%? Time will tell, but we do expect now, given the a level of international uncertainty especially around the US tariffs, that those interest rate cuts are likely to be pulled forward. We did get asked by a current client this week, what will happen if we see a recession across the country, across the world, like an international recession? What would that look like? What would that happen? What would Australia, what would be the impact on property here in Brisbane if we have a recession in Australia? And it's a great question. Of course, how long is a piece of string? If we do see a recession, what is that likely to result in? It can impact on the demand side of things. Obviously, interest rates may decrease if we lose some of that economic activity and that GDP growth. That could further stimulate certain segments of the market, but you have to weigh up not just the demand side and how demand could be impacted, but what's actually happening over on the supply side. How many properties are available for sale? How many properties are being built? What's happening in terms of population movements? And Australia is very unique as an island country with huge international migration. We are very unique, and you can't necessarily compare our housing market with other housing markets around the world because of the unique dynamic between the properties that are available for sale and the demand that exists in a particular market. And equally, you can't predict what's going to happen to the Australian property market. It's more likely to be local drivers. And what we are excited about here in Brisbane, regardless of what might be happening on an international level, is that there's 3 levels of governments putting money into building infrastructure for this event in 2032, which will continue to drive our local economy, create jobs, and also, maintain a level of economic activity locally here in Brisbane. So that's good news for our region.
Yeah, and I think the people out there that are listening that thinking about investing into Brisbane and getting in a part of this infrastructure, this boom and this change in Brisbane. Obviously, here at Streamline Property Buyers, we've got the most qualified team going around. So we've got a licensed builder, myself, and we've got 5 qualified property investment advisors. I don't think there's anyone around that has anything like that. So if you want to learn from the team and you want to get to know about it, just reach out, have a chat to us at Streamline Property Buyers. And if we can help out, we'd love to be able to get you into a position that's going to get you into Brisbane and get you excited with what's happening in Brisbane as well. I think there's great signs for Brisbane. I think everything looks positive. We've got, as you said, the infrastructure, the Olympics, the Paralympics, employment, you name it. It's all seems to be happening here in beautiful sunny Brisbane. Why wouldn't you want to live up here?
Why wouldn't you want to live up here? I mean, I've lived here all my life, and there's nothing there's nowhere else that I'd rather be, to be honest, especially with the excitement and the hype around what's actually coming. And of course, if you're a property buyer looking to buy your piece of Brisbane, whether that's a home or an investment property, or even if you're a commercial buyer, getting an understanding from those who are on the ground in the game 24/7 is really going to help you. Experienced buyers agents and qualified property investment advisors will guide you to better quality assets, which can make the difference in hundreds of thousands of dollars or millions of dollars over a 30-year period in terms of that equity uplift. So that's something that we can help our clients to understand when they do partner with experts as well. That's it for our market updates.
Perfect. That's a wrap. As usual, Melinda's going to wrap things up again and say goodbye. And from me, look, thanks very much for listening. As we said, if you need help, reach out to the team at Streamline. We'd love to chat to people and help people out, get ahead in life and make the most of every opportunity that they've got. So reach out to the team. Take care and bye for now.
Thanks again for joining us on the Brisbane Property Podcast and specifically for this market update episode. We hope you've enjoyed some of the data that we have been able to share with you today. As always, if you have enjoyed this content, please share with friends and family. We would love for you to also leave us a review on your favourite podcast player and hit that subscribe button so you don't miss any future episodes. We look forward to speaking with you again next week. Until then, bye for now.